morning, everybody. Hello, Jim, Felix, Mark, Sam. How's everybody doing today? Hope good. Hey, John. Glad everybody could make it here today. For some, kind of a bah humbug morning. For others, maybe the greatest thing that ever happened. So, I hope it's on the right side for everybody. Hello, Phil. How you doing? All right, we'll give it just a second here. Just a quick little second. I see that a few more people are coming in. Hello, Mira. How are you? And Merry Christmas to you and your family as well. Thanks for being here. Appreciate it. And thank you. It's that time of year, isn't it? All right, let's get kicked off. It's time now, so let's get kicked off here. So I've got the VXX up. It's just one of the VIX tools here. And as long as the VIX is above the T-line, Trendicator has turned green, then I have to be very cautious of buying long in this market. Right now, I think that, you know what, I want to stay here. Actually, I want to go to VIX, and then this one shows it best of all, I think. So here's the CBOE Market Volatility Index, and you can see how we're moving up. I've run across an awful lot of people that don't think anything of that because it's done in the past and it just keeps moving back. And man, I'll tell you what, I get that, okay? I certainly do. But I think something that we need to accept is, I'm going to go to a weekly chart. There we go. There we go. And I want to point out how the VIX has been putting in higher lows. While it does pop up and pull back, the pullbacks have become more shallower and shallower. And here we are moving higher on the lows. I don't think that's a good sign, okay? I really do think that this is not a good sign. The SPY here, we're under the 50-period moving average, but we've been there before, so what? We could absolutely bounce and move higher. It could happen. It could. I hear a lot of, in the past, I've even heard some here recently, that buy the dips. Well, there was a time when I think that was definitely true. I don't think buying the dip now is the wisest thing to do as a trader. Not in general. There might be some charts that dip that might be worth looking at. I don't believe that picking bottoms is an answer. It's like here we are on the SPY. Oh, we're at a double bottom. Hey, we're going to bounce and we're going to rally. Yeah, you might, and we might not. I'm not going to put my money on the table to bet on that. So I think the next, until the first of the year, I do think we're going to see a lot of volatility. And I think that a lot of people are going to lose an awful lot of money. And we're going to talk a little bit about that. John there is asking, what about a Santa Claus rally? What Santa Claus? I'm not betting on that this year, John. And I've mentioned this in the Hit Run Candlesticks trading room a couple of times this past week. And as I look out there at the market, look at all the, read the news, and just take everything in, I've got to ask myself, what is good out there right now that could help this market? What is good? And there is the possibility of a Santa Claus rally, but from what I understand, there's not enough products out there, so where's the rally? Where's it going to come from? Anyway, if we get some kind of rally, it's going to have to be something something worthwhile. And let's talk about what would be worthwhile. And well, let me back up here. Over the past few weeks, we've gotten some emails from people where they're a little bit upset. Okay. I do believe in Santa, yes. Yes, I do. I just don't think he's coming to the market this year. We've had some correspondence with some people here recently where they're frustrated and they're not able to make any money. And believe me, I have not made at all what I was anticipating doing this year. And the last few weeks have been just horrible. And why is that? Why have and I'm just going to answer for myself because I can't answer for Rob or Trader or John or Dean or anybody. I can only answer this for myself, and everyone's going to have to answer this for themselves. So why haven't I? Well, I know my weak spot. My weak spot is chop. I'm not a very good chop trader. One reason is I'm not a day trader. Believe me, I'm not suggesting everybody switch to day trading here, okay? You lose money swing trading, say off on a daily chart. All you're going to do is lose money faster day trading. So I know my weak spot, and I know I can clearly see in here that we're in some chop right now, and this whole fast movement, the gaps down, gaps up, no real trend going on here. That's my weak spot. I like trend. I trade trend. That's where I like to be. Now my trend sometimes can be very short in nature, such as just simply the T-line moving up or the Trendicator, but even that's not working. And it's not moving up today. So I'm going to reach out to all those folks that have shared this sort of thing with us. And I'm actually going to do a video for one person talking about their trades and whatnot. I'm going to do that this week. I just have to wonder, why are you trading? Why? Because the market's open? Because CNBC came on at 5 o'clock in the morning or whenever it does? Why? Because you have money in your account? Why are you trading? Trade when you have an advantage. Don't trade when you have a disadvantage. And right now, I believe you have a disadvantage. I really do. This is a very tough market to trade. So be very careful with that. So if I had to lean anywhere, I would lean toward the short side. That's why we're going to look at we're going to look at bouncing off moving averages to the short side. We did this a couple weeks ago, had such a great response that now let's talk about it going down rather than going up to the bear side. One of the problems with today is I do not believe that the majority of people expected the market to gap down like this today. Now, of course, there's going to be somebody jump out of the woodwork. I did. But the majority of the people did not expect this big gap down. So let's get short, right? Well, hang on. You never want to chase. And really, that's what you'd be doing right now, is chasing. There's an awful lot of trades out there that look crazy short. I mean, they look crazy short. The problem is they're a little bit oversold on a fast time frame. So if you don't have a problem, which I do not believe this is the case for most people, if you do not have a problem, and just say that this is a chart, any chart, doesn't have to be the SPY. It could be whatever you're looking at to short, okay? So it's gapped down here. You're going to short this. Let's make that a little smaller. There we go. You're going to short this. There's no problem with that. If you are okay with some sort of a little relief rally. But I find that people like to say they are, but the truth of it is they're not. And here's what happens is, so you short this, you put your, whoops, it's not at all where I wanted that. Say you put your stop at the 50 period moving average. And on paper, that sounds absolutely wonderful. It truly, truly does. It sounds, oh my gosh, I'm a trader. I figured this out. This is really, really cool. Well, that's all fine and dandy until it gets up here, you get scared and you close it, and in the meantime, you're $500 upside down. Well, you do this a couple of times, a day, a week, in a 2-week period, then you're in a hurt. You're in a bind. You're in the hurt locker there. That's painful. So be prepared for that kind of thing. We could absolutely bounce right here. And I just want to warn that if you trade charts that you're chasing, you do get those bottom pickers come in, and they start pushing it up a little bit. And all they have to do is push it up a little bit, say to this level right here. You get out, and then the short traders start coming back in again, and you're wondering, what the hell just happened here? Well, it's real simple. First of all, it was bought in a crappy market. This is a crappy market. I don't care who you are. I don't care what day of the week it is. This is a crappy market. So no one could ever convince me of anything any different. There is no logic to this being a good market right now. So why trade? Why trade any direction at all? Just take some time off. It just, and then it's you don't want to be chasing. That's so important. Don't chase. Okay. Sorry, I could spend an hour just talking on this chart right here, right now, but that's not why we're here. So let's don't do that. So let's. I've got some questions up here. Let me answer those. Todd, will you be posting results? Yeah. Yeah, we stopped for a while. Just got kind of busy with other things. And I've made mention before. It's out in public. It's on video somewhere. I certainly have not done this year what I expected to. Not at all. And but either way, it's not posted there. Okay, but yeah, I plan to do that. I plan to put it back, yes. John is asking about capitulation. Capitulation's pretty easy, really. Capitulation is when you've say been over, bumped to the downside, and usually it's from a gap, just like this. But you need another component with that, and you need a volume component. There we go. I just went and got the tool. So let's take a look at this gap, and let's just go down to this. Let me change that a little bit, make it a little narrower. I just want today's volume. So you see that volume today, that's not capitulation. So one of the things you look for is a gap down or a big old move down. And then you want high volume. And that's what gives you capitulation. And we're not even remotely close to that today, so I do not believe we're there. So that's what that is. Let's see, Con. Is this the start of a blood in the street? Con, I can't predict that. All I can do is follow the chart. That's all I can do. We could put targets on this. I'm going to go to a weekly chart, just so, make that a 3-day chart. There we go. I'm going to go to a 3-day chart just so we can see more of the chart. No value for this conversation of a 3-day chart other than I can see and you can see more of the chart. So all I'm going to do is follow price and the trend. Now we can come down here and we can put possible I'm going to put one right here too. Well, I'm just going to split the middle. Possible target levels, but you nor I, nobody on CNBC, nobody can predict that any of that is actually going to happen. Nobody can, okay, guys, gals? The whole predicting of things, it just has no business in stock trading. No business. You should work by rules and not prediction. So I've pointed out a couple areas I think here where price could come to. So now I'm a trader off the daily chart. So there's our targets to the downside, possible targets there. So I'm going to simply follow price, and I'm going to follow a few common sense trading rules that I've learned over the years. When you sell off too much too fast, you're likely to get a bounce. You are. It doesn't mean it's guaranteed. This is why I don't want to short right now. Not because I don't think we're in a bearish mode. I think we're absolutely in a bearish mode. But I want to wait for this to prove. And move up here maybe to the 50. Fail in here. Some sort of a fail signal up there. Now I might short that. Absolutely. And by the way, it doesn't have to go to the 50. Just somewhere up in here. Okay, above today's candle. Then what we're going to do is we're just going to simply follow short chart patterns to the downside. By the way, thanks for this, Con. It's a good question. Appreciate it. Follow the short patterns to the downside. And how will we know when the downside is over? That's very simple. That is truly very simple. But what it's going to require is the strength to step away from the market for a day or two, maybe even a little longer. So here we are. And let's just say for this conversation, we come down here to that line right there over multiple days, okay? Multiple days. Let's do that. So how will we know that the bulls are stepping in? Well, first of all, I want to talk to all the people that do this. You see a bullish candle in here, and if you are one of those people that look at that bullish candle and you're one of those people that's about to throw the towel in on trading, well, stop looking at that bullish candle, okay? That means absolutely nothing. That means absolutely zero, zip, nada, okay? So here's what we want to look for, and this is where you have to have the strength to take some time off, because this is where chop begins. Let's see here. I'm going to have to use this one. Let's make this this here color, whatever this is. This is where chop begins. And it's chop because now the bulls and the bears are fighting back and forth, back and forth. And what we need is a couple things done. One, we need to show a high, a higher low, and then a breakout over the highest high. That right there is a signal from that point right here. From that point, that's where we can look at this market and say, okay, we've been in a downtrend, we've based out, and now we've broken out. We can now move up. I'm not saying we can move back up here. I'm just saying we can move up until we get the next sell scenario. But it's going to require stepping out of the market. Otherwise, you're just going to get chopped to pieces. This right here, this area right here, chop. That's very, very a big choppy area because you've got all the buyers buying the dip. You've got the buyers, oh, we're getting a good deal. They're going to start buying things up. And then you've got the naysayers that's just still pushing it down. It's just a battle. And retail traders get caught in the middle. Retail traders, the bigger traders prey upon the retail traders. Retail traders, and that's you and me. Retail traders have to be smarter. We've got to look at a chart and say, you know what? I know that this is chop. How do I know this? because I've seen it for umpteen years. And we need to wait, no matter how long it takes, to either break to the upside or break to the downside now. So careful with that, John. Anyway, I'm sorry. I think I got off on a little bit of a tangent off what somebody asked. My bad. Let's see. I hope that helped there, Con. Thanks. Since when did chasing into fading momentum work for anyone? Yeah, yeah, you're right, Matt. It just doesn't work. But what happens is we have a trading account. What happens is we have money in our trading account. What happens is we have a computer with 6 monitors. What happens, we're in a trading room. What happens is we get bullied into things sometimes. And we've all got to be big enough people to say, this is not my market. This is not my thing. This doesn't work. Know what works. And this is one thing where this is a perfect time of year, by the way. Pull out a notepad and start writing notes to yourself. When do you make money? Go look at your trades. What was the market doing when you made money? Whether you made money long or short. What was the market doing? What was the price action of the overall market looking like? You know, was the market trending down and you lost money going long? Ding, 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 ding. Write that down. Write that down. Okay. So let's see here. John, do you look at insider trading of the top S&P 500 stocks if they are selling into strength to gauge if the market is overvalued? No, sir, I don't, John. This is my own personal opinion, okay? First of all, I'm not an accountant. I'm not overly educated. I'm not a read through a stack of papers kind of guy, okay? When I have to sign a contract, I'm usually the kind of guy that just give me where I sign it. Just where's the sign? I'm not going to read all this stuff. My point is, I'm not a real fundamental kind of person. I know that's not what you asked, but I'm not going to look at that stuff. And I'm not going to look so much at insider trading because I think one of those things will lead you down this rabbit hole that I never want to go down. I tried going down it once, and it's a nightmare. What I find is simply just look at the chart. I can look at this chart and tell you right here, everybody knows it. You know it now in hindsight, but why don't we know it going forward? It's clear as a bell. You've got a top right here. You have a failed top right here. We couldn't get through, and you've got a dark cloud cover. What is it you could possibly read about insider trading? And I'm not saying you can't. Maybe I should say that to me. What could I possibly read about insider trading or any kind of fundamental anything that would tell me not to be short? Or in my case, usually what I do when things are like this, I back out of the market a little bit. I've certainly played some short trades. But what do I need other than the chart? And I don't believe I need anything. I believe that that right there tells me everything I need to know. I believe this right here tells me everything I need to know. Now, it's just my opinion, my way of trading, okay? I'm not trying to poo-poo insider information, all the research. I'm not trying to poo-poo any kind of fundamental work, but everything is in the chart. The bottom line is, if you're making money in this market, keep doing exactly what you're doing. Don't change anything. I think all of us, 100% of us, if you're making money, there's always room for little tiny tweaks. Test those tweaks. Are they working? Are they not? Don't make big changes if you're making money. Just make little tweaks. If you are not making money, literally take what you're doing and put it in the garbage can and start over. Put everything in the garbage can and start from scratch if you're not making money. But that will only work if you go into it with an open mind. So anyway, most of that was just my opinion there on the whole following the S&P insider trading. No, I do not follow that. Let's see, Mara, second high in the SPY is a bearish engulf. Yeah, that's a bearish engulf. Shooting star, high wick, yes. And that was very clear once we got, see, I follow the T-line a lot. The T-line has a lot to do with my trend and these red and green dots, which this is nothing more than the 17 exponential moving average. That's all that is, okay? I need to watch my time because I really want to talk about some trade setups, a lot what we talked about right in here and the 17. So I promise you I'm going to get there. And I really want to leave time to look at some trades that you guys might have as well, okay? So we'll do that. Excuse me, Dean there. We only have past action info in insider trading. Very true, Dean. Yeah, very true. Let's see, Matt, and any significant effects in insider buying or selling is simply show up in chart. Yes, it all shows up in the charts. Maybe not, maybe not one insider that's selling, but it's all the, all the following. See, okay, all the following. So, all right. So anyway, and we'll get to looking at specific charts in a bit here, but first let's get, because that will explode on us here. So we'll hold off and look at that. All right, let's look at some charts, okay? And I want to talk about the bouncing, and we're going to look at short charts here. A little bit later on, we can look at longs too if anybody wants. I need to get this cough out of my throat. A little drink of tea there. Maybe that'll help. Okay. So I'm a big moving average trader. I truly, truly am. And here a while back, I realized that I wasn't talking about that nearly as much as I should be. But it's reflected in all scanning I do. All scanning I do reflects a moving average in one way or another. And many of the scans reflects multiple moving averages. So I've kind of made it an effort to talk about that a little bit more. And I love trading long. I love trading bounces off moving averages. I like that. Could have been a bounce off the T-line, could have been a bounce off the 17. Depends what scan you might be looking at. Right here, this could have been considered a bounce off the T-line. I know it closed above the T-line, but the bounces I use looks at a certain percent above the T-line or a certain percent below the T-line. I don't look at exactly the T-line. I think that's just poking yourself in the eyeball is all I think that is. Tim's asking, how do I get the T-line? Tim, the T-line is simply the 8 exponential moving average. That's all it is. It's just, oops, there we go. Sorry, I had that wrong. I was looking at that earlier. It's the 8 average exponential, and here is last price, okay? So that's all it is right there. You bet. You're very welcome. So what we're going to look at today is most everybody here has probably heard of blue ice failure. Blue ice failure is the 50-period moving average. Notice it's blue. It's a term that was coined from a gentleman by the name of Dave Elliott. Some of you might know him as First Wave. And far as I know, this is his chart setup, and I love it. I mean, it's absolutely fantastic for a short. And man, I apologize. So here we have a top. The blue ice failure, by the way, is not a chart to catch the top. It's not. It's not going to catch anything in here. It's not going to catch anything in here. What it's going to do is it's designed to look for charts that fail the 50-period moving average, have trouble, and then continue to the downside, just like that. And from there, we're going to follow the chart and price action. The thing of it is with all the charts out there, how do you get to this? Now, there's probably 101 ways to get to it. The way I get to it, of course, is using the scanner. And I'm going to share my scan with you here. But that's what I want to look for. I want to look for those charts. And then what I'm going to do is, if I choose to short this, then I'm going to put my stop will be in this area. I'm not, there might be some cases where I put my stop up near the 17 EMA, near the red dot. There might be some cases, and that certainly could be a starting point. But from there, I'm going to look at price. Let's talk a little bit about candlesticks. Candlesticks require follow through. So say you have a candlestick, you can trade this all you want, but if it doesn't follow through above its high, then you got nothing. And this is known for, bottom pickers. These are the people we hear from. I can't make any money. Why can't I make any money? We get so many emails and questions about this that, why do you do this? Well, candlesticks require follow through right there. This becomes the tradable bottom. But so many people seem to think that's the candle there, and it's not. I don't care if that's a bullish engulf. I don't care if it's a bull kicker. I don't care if it's a belt hold. That's not the candle to chase after. Okay, so with that said, candlesticks works on follow through. So here's Friday's candle, and here's today's candle. What if today's candle was to come up and break out of yesterday's candle? That's follow through. That's where I want my stop. So if price can get through yesterday's candle, Friday's candle, then I wouldn't want it. Now, I know it's still in a downtrend, but downtrends are broke both up and down because of buyers and sellers. And candlesticks, man, that is one weird, kind of hard to get it. I'm going to leave it like that. But candlesticks shows the buyers and sellers. So I realize the downtrend is there, but I don't want to be holding this short if the sellers are starting to attack it, because that's what attacks trends. All right, so anyway, here is a chart that's looking short based on the chart and coming from the scan. Microsoft is as well. Microsoft is showing it here. Let me put this down here. Let me make sure this is stay on top. There we go. There's Microsoft. We just looked at NVIDIA. Let's look at D-Dog here. D-Dog. That's not it. D Dog. There we go. D-Dog. See how we're back down through the 50-period moving average, and yes, this was a blue ice failure right here as well. But as I do respect candlesticks, notice the big old hammer in here, and I do respect a doji of meaning just about nothing, to tell you the truth. It's indecision. Doji is noted for its indecision. Right there should be a clue to traders. Should I buy this or should I not? It's indecision. You want decisions, not indecision. So I wouldn't be long or short at this point based on this blue ice failure, because the candle signals are not telling us to do that. Here we did, though, rally up, and now we've come back, and now we're bumping up against that 50 again. So while it's coming up on the scan, I may have a problem shorting this, again, because of the candlestick signals here. This is a bullish Fig Newton chart pattern. The scanner, in any scanner you use, okay, I don't care if you make your own scanner, whatever program you use, it doesn't matter. It's just a piece of mechanical equipment. It's just a tool. It's mechanical. So it can't visualize. There's no scanner that can visualize all these single candles in this past whatever, how many days this is. So that's where we come in. We are the final scan. Our eyeballs are the final scan. So while this is coming up on the blue ice failure, I can't possibly, well, I could. My stop would be pretty tight. I could definitely short this, I guess, but my stop would be pretty tight, probably right there at 171.50. But what's nice is I get this choice, EFX. There's another one. I can find these, and I think that's what we're all looking for. We're looking for charts to trade. So that's what we're always out hunting. Boys and girls, always, we're out there hunting for charts to trade. And that is one of the most time-consuming things there is into trading. So we need to be able to be handed these charts and don't spend our time looking for charts. And we need to spend more time on working with the charts that we're trading. So this is just a great way to do it. And, you know, whatever system you might have. Here's, again, it's mechanical. So it doesn't, it's just showing me charts that are below the 50 and they're a certain percent away from the 50 moving average. So I don't want to short, say, down here, because I don't even want it to point out charts that are down here, because I'm shorting off the 50 or going long off the 50 period moving average. So being mechanical, it doesn't tell us this sort of thing. It does tell us this right here. So while I'm looking at this, I'm not sure I'm going to get big and short on this unless it starts to show weakness on today's candle, maybe coming down through Friday's candle. This is possibly a bullish setup above that 50. This is a great one for the watch list. I'm going to actually flag that for both ways, okay? So let's see, some more questions here. Matt, candles are between the 8 and the Trendicator. Is that the trap? It can be a trap, Matt. Absolutely. It absolutely could be a trap. When you hear us refer to the word trap, I will guarantee you we're referring to the 3 and the 8, okay? But the 8 and 17 could absolutely be a trap. In fact, I've got scans just for that. A trap can be the 20 and 50 for that matter. All you're doing is trapping price between two moving averages. That's all you're doing. Now, there's a couple things we want to do. Like you might want the overall trend to be somewhere moving up. Oh, no mistake, no worries. You want the overall trend to move, either be moving up or down, depending if you're looking at shorts or longs, maybe things like that. Again, the trap literally could be any two moving averages you want. But if you hear it from us, just the word trap, that will be the 3/8 trap. Okay. So let's see. Let's look at LYV, and then we're going to look at another one. There's LYV here. Now, this is, I want to stop for a second. And this is one of those things that I mentioned early on. Be careful not to chase this move down in the market, okay? Because while this is a blue ice failure, there is no question about it. You've got price that has come down, bebopped along the 50 period moving average, and it has failed the 50 period moving average. So there's no question about it. But as traders, that's not the only thing we need to know. We need to consider price. So, do I want to be shorting this right now? Maybe not. Maybe not. What we have here is a little bit of a bottom. We've got a couple bullish Hiromi type candles here. Do I really want to short that? Maybe not. On the other hand, if it starts showing weakness, maybe today or tomorrow, down through that line, absolutely. You bet I do. But I need to see this give way. We want to watch price is what we want to do. All right. Let's take a look at this. These are two of my favorite shorting bounces setups right here. And this is the Trendicator. This is the 17. So let's DXCM here. Look at that. Now that I like. See how we're in a nice red downtrend based on the Trendicator? And that's what this thing looks for. It looks for failing the Trendicator. It doesn't, I mean, you could set it up, I guess, to be trending down. You could definitely do that. And be pretty much red. Yeah, you could do that. But I'm looking at failure here. Again, I'm using a bounce off a moving average. So it makes it so simple to start with a stop right there. I'm going to just put it right on that red dot. That's what I'm going to start with. And then from there, I'm going to evaluate price. Should I actually move this up? My eyeballs are failing me here. Maybe to the very high of this candle. What is the high here? 561.38. And that's close enough. And by the way, for somebody that says, well, this is worthless, I'm never going to trade a $560 chart, don't. But a chart is a chart is a chart, okay? A moving average is a moving average. I don't care if it's on a 50-cent chart or a $560 chart. This just is what happens to be coming up on the scanner at this moment. So don't get scared away by $560 chart. The chart is a chart. It doesn't matter what you're looking at. So I see this bullish Hiromi here. I'm thinking, all right, I might be willing to short a bullish Hiromi. Just make sure that stop is in there. It is that blue ice failure. Let's take a look at BR. There's BR. Oh, and by the way, we'll go look at what these are. I forget what the settings are. I don't remember. Once I set them, I try not to mess with them. What this is looking at is a certain percent away from that, in this case, the 17 here, and the 50 will be a certain percent from the 50. The 51 will be. And it measures where it, the high. Okay, it doesn't measure from down here. Here's what I mean. Let's do this. I'm going to go in there and see we've got price bounce 1.5%. So this has got to be 1.5% away from the 17. And it could definitely get further than 1.5%. So really what I'm telling myself is that I wouldn't short this because we've moved too far to the downside. I don't want to chase it. We're right here at the dotted deuce. We're awfully close to what could be a bottom. Doesn't make sense. On the other hand, if this was, say, shorted earlier today, maybe in that area, well, that puts us less than that 1.5%, right? So what this really what I've done is I've set myself up to look for a trade that I could look for close to a 1.5% stop. I want to buy close to my turning point. My turning point would be the 17 in this case. Now, this is where I'm not going to use the 17 100%. I'm going to come in here and look at some price. And I see this price, there's a low and a low. We've got a double bottom. You know what? That might act as resistance. So I'm actually going to raise this up just a little bit right there. And in this case, say we bought it right here. I've just created a 1.73% stop. So it's a terrific trade idea for getting a entry or a setup next to what matters to you. And for these two conversations, what matters is the 17 or the 50 period moving average. Let's go look at MTTR. There's the 50 period moving average. Let's see what this, because I really forget. Oh no, this one is not. This is just a blue ice failure. But, oh, we do have the price bounce. Okay. So this is a blue ice failure. You're right. With the spread on here. I have a trap set up on this. Oh, that's part of the blue ice failure for me. And here is, there we go. I'm looking at 3% on this one. So I want price no more than 3% below the 50 period moving average. So let's take today's price, and we're going to take that, if I can get it there. There you go. Close enough. That high. Oh man, this is hard because this is so tight. There we are right there. So we're right there at the, this is 3.07, so maybe the 50 or the T-line, or the 50 and the price is, just a fraction here and there. So you can see now where I can control, or not control, but I can look for a chart that is doing overall what I want, such as a blue ice failure. And I only want to be notified if it's reasonable by my terms. In other words, I don't even want to see really a chart that is down here. I don't even want to see that. Probably should have made that red, shouldn't I have? There we go. I don't even want to see it. Why waste my time? Because I'm not going to trade it. It's too overextended. So I want to find things right there in that area. I just saw Microsoft alerted again. There's Microsoft. There we go. Does that make sense? Anybody? And let's see here. John wrote, when do you decide when the 17 EMA or 34 EMA or the 50 SMA is going to be support based on the number of days above, based on a number of days moving average line? No, John. I'm going to look at the overall chart for that. So I forget which one it was, chart we looked at. So if we're, I guess we can look at a short. If we can look at a long too, maybe, and see that. But if I was to short Microsoft here, then I see a turnaround. So maybe tomorrow we see a candle like this. Well, that's going to make me nervous from the get-go. Because it's still in this downtrend, I might wait to the end of the day. And if for some good reason we actually ended up with some kind of wick on that, I should have made that a little smaller, some kind of wick on that, I might just wait and see if we actually get through that candle. So I don't look at how many days above or below. At this point, I'm looking at the chart pattern and price action. Okay? I'm using the chart pattern to find the setup is what I'm looking for. So, for instance, we love the blue ice failure. So why not use a bounce off the blue ice, the 50 period moving average? We love the 3/8 trap. Why not look for bounces off the T line? I love the in a bullish view. I love a bounce or a trap, the T line and the 17 trap. So why not look for a bounce off of the 17? And it could be any moving average you want, by the way. Please don't ever think that there's some magic to the 17 EMA. There is not. Please don't think there's any magic to why we're using the 50 period moving average. Why we use it is because everybody and their brother looks at it. It's kind of a do or die line. Above it, well, it could do. Anything below it, it's dying. That's kind of a universal look at the 50 period moving average. So no magic. It just everybody looks at it. So anyway, it's using the moving average and having a scan to get there for whatever moving average you're looking at can be very, very beneficial. Let's see what this looks like. I've seen this pop up here. Take a look at gold here. So this has been in a downtrend, and this is coming up on one of my bounce scans, and here we are right there. Right here at the T line. Do I want to take the trade? No, but I'm being alerted that it's in that area right now. Okay. Let's see here. Thanks, Matt. Appreciate it. Let's see. My AOS will be a blue ice failure. AOS will be a blue ice failure, providing it breaks below 114. Yeah, and truthfully, it's still a blue ice failure right now. This is a blue ice failure to me. It doesn't mean we're going to jump on this as a short, because the price action is saying slow down a little bit, don't get too excited. Here we have a low, we have a high, we have currently a higher low, or you could even call it a double bottom. We have some candles in here that have been down here before, and the bulls keep propping it up. So what we need to see is a sign, and just take this chart right now. Look at this. We've got, let's use this right here. I'm going to use that about right here, I guess. And I'm looking at price action through here, and I'm going to move this up right to this low. So as we look at AOS, this is a blue ice failure. However, if this thing was to move up and break out here, and it doesn't have to be one day, it could be multiple days, I'm going to have to look at that as a long trade, and a nice one. And here we are working in and around that 50 period moving average, blue ice failure that could turn into something. On the other hand, if we do see the weakness in there, I might short that, and a short below this blue line as well. Here's, I think, we only hear from people that struggle. We never really hear from people that are doing great. People that struggle write us notes, can be short, can be long. People that struggle, they do coaching, things like that. And there's a couple really right away things that I try to get to the bottom to. One, are they looking at intraday charts and just stop doing that? But that's not what we're talking about, so that's all I'm going to say about that today. The next thing is, come to find out, they're trying to buy this in here. Why? When the better trade is let it break out. And everyone's afraid they're going to lose this piece of money, but what they do is they're writing us notes, calling us, because they did that and they've lost money. This is like a slam dunk given on everyone that every person I talk to. This is almost a guaranteed thing right there. Just stop that. So sorry, I'm getting off in left field again. I have a horrible habit of doing that. So I agree, I absolutely agree. Let's see, Matt. Whatever moving averages one chooses, just be considered. There you go. That right there, folks. Thank you, Matt. Right there is, if you want to take away something from today, take that away right there. Take that away. That you are, be consistent. You're absolutely right. Look at NVIDIA here. Are we, is NVIDIA a short? Is that set up for short for anybody here on NVIDIA? And by the way, feel free to answer whether you trade $300 stocks or not. Okay, just does that chart look like a short trade? Yeah, it does. And the cool thing is it can be pointed out right there. It sure does. Let's go look at QSR. Now we're getting, here's a kind of a comeback here. But that doesn't mean that it can't be a short up into this area right there. In fact, that's what I'm going to look at. Moving back up. Low, high, higher, low. But heck, we've been doing that all along. So I'm going to look for a sell signal on this. Excuse me. There you go. My has a rule. There you go. Nice, my. That's nice. I having those little rules I think is fantastic. It has to kiss the T line. Okay, you can do that. Absolutely. That could be made in the scan too, because there's an alert. I may be calling it the wrong thing, squeeze or something like that. I may be calling it the wrong thing, where you could put price really tight. Well, you could do this with a blue ice failure. You could make it. In fact, let's do that. Blue ice failure, bear bounce. Okay, let's do this again. So we're going to go price bounce, price bounce. There, bear price bounce. But this time I'm going to use the T-line, exponential close 8. Let's keep it at 0.5%. That's enough smooching for me. And we're going to put this up there. Now that only gives us 2 symbols. Now because I want more, what I'm going to do is switch to all. That only gives us 7. Good grief. Let's add a little volume to this just because that's the right thing to do. That knocks us down to 4. We're set on 15-minute. So I just created a blue ice failure scan that has to be within 0.5% of the T-line, kind of for your setup. So let's, since I just don't have patience, let's take a look at this. We'll look at C's. There's C's. Now, this is well, let's just see what this is. And I'm going to take, whoops, there we go. From the current price, we're 1.65%. But earlier today, you can see that we were right on target, right there. That's where the high was. That's what this measures. Okay, this is a good idea. Thank you. I hadn't thought of this. This is nice. LYV. See, LYV would have given you something a little earlier. Right now it's not set up, but it would have given it to you earlier. And let's see, CR and X. There we go. CR and X. Let's see what this one is. See, that's 2%. 2%. But you can see how it did some smooch in there, right? Good idea. I like that. I'm going to have to think about that. Now, different scenarios. In other words, today is today. You might not get a lot that's kissing that T-line because the market gapped way down, right? So a lot of things gapped away from the T-line. So a day that we don't get that gap, then that, I think we would get more than 4 out of there. All right. All right. Any questions? I'd be glad to answer. If anyone wants to, if you have charts you want to take a peek at, let's take a peek at them. Please. Thank you. Shoot, fire away. And I do want to thank everybody for being here today. I truly appreciate it. So, you guys are on deck. Any questions? Anything you want to look at? Talk about RUDS. RUDS. Whoops. That doesn't work, John, or I didn't do it right. RDUS. Oh, there we go. Rudis. I would have to say that that's still a short trade. It's just not a long trade because it hasn't done anything that would make me want to be long in it. I'm going to go on a line here, just a long line, so careful not to jerk me back. Are you looking at this because of the big volume Friday? Maybe? Is that your thing? Which it could be, and that's okay. I'm kind of thinking we have a low. Let's open this up. We have a low. We have a high. We have a higher low. So I'm thinking if this moves over this higher low, because that's where my tradable bottom will be, then I'm thinking that might be a nice little trade there. So thank you for that one. Appreciate it. I'm going to flag that. I like that. So there's, so John's got some insider buying. There's the big volume on it. Thanks, John. Here's where some people get in trouble. Okay, not saying you, John, just some people. So we have this massive volume on Friday, and we get alerted that there's some insider buying. That's great. That's fantastic. So traders go out there and buy it, and everything is working just fine. It even pops up, and then what happens? It comes back down, and it comes back down not to destroy it, because we're still above those levels. But what happens is that's not what somebody intended, so they close it out with a loss, and then it starts to turn around. So I think we want to make sure the price action and the chart pattern is in our favor to buy when we buy. Now, I'm a short-term swing trader. I'm not an investor. If I was an investor, I could make hay of this. I get it. I do. Come down at this far low that we have, put a stop and invest. Anything below 655, I would have to uninvest. But I wouldn't pay attention to anything in here until it started moving up. But I'm not that. I'm a swing trader, so I've got to follow the chart pattern there. Thanks, so I love the chart. I love the idea. Just need the buyers to step in. Let's see Val. Val was the only chart that I carried over the weekend, and I'm still in it. I'm on the verge of closing it. I was on the verge earlier of really closing it, and we'll see how it closes today. But I don't want to be a hero here. I don't want to be, I don't have a big S on my chest, and I don't want to get in trouble with this. I truly believe that the biggest problem, 99% of all traders, is not controlling losses. And if we control our losses, everything else will take care of itself. Finding, say, a 3/8 trap is a no-brainer. When you have the right tools, like the scanner, to find blue ice failures or failure of a moving average or a bullish bounce off of a moving average or any other setup you want. Maybe you're a cloud trader. How many people here are cloud traders? Anybody follow the cloud? And I want to share with you right now, the only thing I know about cloud is I look up in my sky right now and I'm going to see either, puffy white clouds or blue sky or rainy clouds. That's about as much as I know about the cloud. So any cloud traders, don't be bashful. Don't get spooked. Just curious. So anyway, control your losses. I would rather take a small loss, which I have on this right now. I would rather take a small loss than be a hero on this thing and think that I know more than I really do and have it sneak down here. And now I'm down 40% on this thing. Now what am I going to do? Am I going to take a loss there? Or am I going to continue to pretend that I've got an S stamped on my chest and just get all beat to death? So I think controlling your losses is the key to trading. Finding long charts is a piece of cake. Finding short charts is a piece of cake with the tools we have today. But controlling your losses, that's still left up to us mere mortals. Alrighty. Hey, Chuck, do you ever close a losing trade based solely on the dollar loss? Excuse me again. So Chuck is asking, do you ever close? I'm laughing because the answer is a great big yes. But there's something that happens before that. Do you ever close a losing trade based solely on dollars lost, or do you always close out based on price action of the chart? Okay, so do I close a chart out based on dollars lost? Absolutely yes. But it's always because I bought the chart wrong. In other words, maybe I bought it too high and set my stop too low. Or maybe I was in a chart and it gapped down overnight. So, or maybe I had a stop on it. Say we didn't have a gap down today. Maybe I had a stop on it. I'm going to purposely put it in the middle of this candle right there. So I had a stop on it, but for whatever reason, I took the stop off. Evidently, I thought I wasn't immortal. Evidently, I thought I had an S stamped on my chest. Well, now I'm down. So would I close that out because of dollar loss? Yeah. But what happened first? What happened first? I didn't obey my rules. So really, now that I think about it and now that I've said it, the only way you close out for dollar loss is because you didn't follow your rules. I think that could be the only way. Yeah. So that's what I'm going to go with. Let's see. John is asking, do you decide when to buy a stock versus buy an options? Is it when price is below 10 or the stock? You know, a couple years ago, 3 years ago now, something like that. I've never traded an option in my life. 3 years ago, 2018, January. Yeah. I started trading options, and I think in 2018 I traded 3, 4, maybe just stock trades. I don't even trade stock trades anymore. I just don't. And let me give you an example here. Okay. I was actually considering BBIG this morning. This is in my watch list. I'm watching this very closely. I want to be part of this, but I'm going to wait for it to set up. Well, it was looking pretty good this morning, and it went up past that, so maybe I would have made a day trade. I don't know. I can't foresee that. But it was looking pretty good. It came up on my scan. It was rocking, and I went and looked at the options on it, and it's a $3 stock. But the options were not expensive. The spread was too big, so no way. I have gotten over the last few years, all I trade is options. Just my choice. No other good reason other than just my choice, John. That's it. So, let's look at 3M here. Could 3M be setting up for a short? Could be. Could absolutely be. IBM was one of the charts on our bullish watch list today, and I still think it's bullish. I think it's looking pretty good. VZ was on our bullish watch list today. We talked about it Friday as well, and I think Thursday. It still looks good. I'm not suggesting by any stretch of the imagination that these are buys. They're just on our watch list. Thomas, same thing on Thomas, TUMS, T-Mobile. Oh, thank you, John. Thank you so very much. Hey, Daniel, thank you for being here. I appreciate it. Thanks a lot. Hope to see everybody. Yeah, by the way, before everyone leaves, because it's getting close to time, I'm not going to leave just yet. I've got exactly 6 minutes. If you're not doing anything next week, yeah, next week, we'll be here next week as well. So, by the way, does anyone out here, Ed, or anybody, have the link for the trial to the scanner? Sorry, I should have put that up earlier. Look, if anybody wants to take the trial for the scanner, I'll have to work with Ed, and we can set up a day, any day you'd like. Now, I have to admit, I'm taking off this Thursday and Friday. I'm taking off next Thursday and Friday as well, holiday time. But we can set up a day that we could go into the LTA room, and I'd be glad to walk you through setting these scans up. I'd be happy to do that. So if anybody would like that, just hit us up, and we could certainly make that happen. I don't care if there's one person or 100 people. If you want to set things like this up, and I've got a couple other things that I'm working on that you might like. We'll talk about those as well. Let's see. Oh, thanks, Ed. Appreciate it. Yeah, yeah. I'm a slacker, taking advantage. Let's see. Maya is saying, I see a lot of people obsessed with winning percent, but it isn't a good idea to lose 3 trades with $1 or 1.5 depreciation on the stock when your target is 10. Appreciation means if I win 1 trade out of 4, I will still be profitable. Your view. I've seen traders be extremely successful trading. And only winning 1 out of 3 trades. How is that possible? You know what? Even 4. And it's because they control their losses. So you could have 4 trades. Probably should have made this red, shouldn't I? You could have 4 trades that you lose money on. But if you control your losses, and if you manage this one correctly, you're going to make money. I think that's maybe what you mean. Well, you're talking depreciation there. Yeah, okay, there you go. So I want to go again. It's important to manage your losses. So this right here, this bounce off a moving average, I think it's not perfect. You're the deciding, everybody here is the deciding factor. But I got to tell you, when I can buy and use something like a moving average, which this has gone too far. Remember, today gapped down. So many charts moved away from what we wanted. It's kind of hard to get into them unless you just find one that's there. Take CBRE. Look at that. We're 1.5%. We're right on target at the open, but it quickly started running down. So under normal circumstances, I think this would have gave a very good entry here, but the gap kind of shot us in the foot. And if we can look for a chart that gives us an absolute, like a moving average. Now, absolute, probably a very poor word there for this, because I do think we need to come in there and take into account price action, maybe, support, resistance. But look, if you can't do that, what would be wrong with if you were to have shorted this up here? Right now, I think it's way too late to short it. If you were to have shorted this up into this area, right there, what would be wrong with putting your stop at 102.23? Not a doggone thing. If you don't want to fuss with price action. HTA. Look where this was earlier. And by the way, this was alerting in here today. It was alerting Friday. Thursday, it was alerting. So by controlling your losses is so important. And if your system to buy something helps you control those losses, then I think you're on the winning track. So James, you put out here SBRE. That doesn't work, James. I don't know if you mean, I don't know what you mean, to tell you the truth. Maybe you've got a different ticker real quick. Yeah, Matt, and I can't, I think Matt is so right on there. Control those losses. Everything else will take care of itself. Sabre, thanks, JW. Yeah, maybe, and then we'll call it quits for today here. Okay. So Sabre here. Sabre is still in a downtrend. You can see that through the railroad tracks there. You can see we're still moving down. We are below the Trendicator, so for me, that means we're still in a downtrend. We're below the T-line. That's still in a downtrend. Target-wise, the first target I'm going to have to go to is this candle right here, and you can put your target on the low. You can put it on the high if you want, which not going to get much out of that. But I would say down in this area. Yeah. Targets by way are about as worthless. I'm going to say this, I guess. Maybe I won't say it. Targets are worthless, just saying. Targets are absolutely worthless. They're great to see. They're terrific to visualize where price might go, but work with price. Work with price once you're in the trade. If you're looking for a long, then you're just a bottom picker. That's all there is to it. Go. Let's go. Go. Hey, Bill. Yeah, Bill's been following this go here. Not a bad little chart. Nice gap up. Everything's looking good. Not sure I want to be a buyer of this in this particular market. But I like the chart, Bill. I truly do. Just don't think I want to be in a long chart in this market right now. KR, and then we're out of here. KR is trending up for sure. And let's just put this up here, parallel. There you go. Nice trend up in KR. I don't want to short it because we're still above. Dots are still green. And I don't want to be long. For one thing, the wicks there just scare the heebie-jeebies out of me. I can say this about KR, that I know people that's made really good money trading KR, and I know people that hate KR. It's a crazy chart. It really is. It either rewards you or it strips you. One of the two. One of the two. All right, everyone, thank you so very, very much. Thanks for being here. Ed, thank you very much for inviting me one more time. And he's already booked me for next Monday, so please join us next Monday at 11:45 Eastern. We'll see everyone then, okay? Thank you.